And today we're going to talk about risk to reward ratios, and then we'll move on. I know you guys spent most of your Saturday sitting here learning how to trade or figuring out what market you want to trade. So I'm going to break down for you what I think is one of the most important things when you're trying to learn how to trade, which is risk to reward ratios. Now, I'm also going to walk you through like how I do what I do. It may work for you. It may not work for you. Like, it's not always a good fit for everyone, and I understand that. So I'm going to walk you through how to make $6,285.25 in just 10 days with risking less than $312.50. And I just need to make sure that you can see my slide. So if you do see my slide in the chat box, just type slide for SLIDE. All right. Now, before I go any further, we need to get the risk disclaimer out of the way. This thing that we call trading is also very speculative, and it's risky as hell. All right. If you look up the definition of trading, it does not say guaranteed income with no risk. That's not what the definition of trading is. It's really risky, and you should only risk money that you can afford to lose, because heads up, you're going to lose a lot of it trying to figure out how to do this business on your own. It's just part of the process. You're going to learn by the school of hard knocks. That's just the way it goes. And if you can't handle that, like you can't handle the heat, get out of the kitchen type thing, right? All right, so make sure you read CFTC Rule 4.41. I used to be registered, Series 3, Series 30. I am no longer registered, but I like to play by the rules like I'm still registered, so that I protect myself and yourself at all times. I like to say that the warning disclaimer for trading should be this. Your trading career is going to end like a bad country song. Your wife is going to run off with your best friend. Your kids are going to grow up to hate you. Your dog is going to die because there's no cats in country songs that I know of. They're going to repossess your Ford or Chevy pickup truck, and they're also going to foreclose on your single wide or double wide trailer. Now, if you understand the disclaimer, just give me a yes. That way I've sufficiently scared the hell out of you, and I've also covered my ass at the same time. All right, so risk to reward ratios are the key to success in trading and investing. And if you get this one thing right, it will make your trading career a lot easier. Now, one of the things that you'll hear a lot of people ask on webinars is like, what's the success ratio of that trade? The success ratio does not actually matter. It's the risk to reward ratio that matters. So when you're in webinars, go, hey, what's the risk to reward of that trade? Don't be worried about if somebody says, first off, if anybody ever says they got something that works out 98% of the time, they are full of shit, because nobody has that. And if they do, it'll be short-lived. It won't last very long. Does that make sense? Like, most professional traders that I know are only right 40 to 50% of the time. If you're lucky, you'll get somebody that sometimes will be lucky 60 or 70% of the time. The key to success when you're looking about trading or investing in businesses or anything, it's really your risk to reward ratio. Okay. It's how much you make when you're right versus how much you lose when you're wrong. Now, I'm going to walk you through and show you exactly how I did this trade. I'm not just going to kill you with trying to convince you that risk to reward trades are the most important thing, which they are, in my opinion. But look, everybody's got their own opinion, and everybody's entitled to that. But I'm going to walk you through. This is the smallest possible trade that you can do on this. This is called the bond market. You've probably heard of it before. And in this trade here, I was short a one lot, and I was up $4,968.75. That's the open trade. And then when I closed it, boom, that's how much I banked right there. All right. And then in another trade, it's a 10-year note. That was the 30-year bond. This is a 10-year note. This is also a one contract trade. So I was in two positions at one time. And then I was up 2109, and then I closed it a few seconds later for 2109.38. So I don't like to just show open trades. I like to show them closed, because until you actually close that trade out, it's still open. So it doesn't make a lot of sense. So if you want to trade more size in this market, you can, and it has a really good risk to reward ratio. This, I've got more size on this one, where it's up 37.50. This one here, I got way more size on this one. And this is the 30-year contract. That's $30,000. So you can have anything in between. You could go super, super small, or you can go super, super large. It just all depends on your risk profile and how much money you're willing to lose in this market. So before we go any further, let's see where everybody is on this webinar. So level one, we got to figure out what stage you're at right now, because at different stages, you have to do different things in order to go to those next stages. So when you originally start out, you're going to get really, really efficient at losing lots of money. And this is what we call level one. I was on a webinar day before yesterday, and like somebody said they were level 0. I'm like, you can't be at 0. You can be at level 1. I guess you can if you've never traded before, but level 1 is where you burn through tons of cash and you get really, really good at it. Then you get pissed off and frustrated and you're like, man, this sucks. I need to slow my burn rate down. Then what you do is you get really efficient at losing small amounts of money over a longer time frame until you get to level 3, where then you start making some money and then losing some money. Make a lot of money, lose a lot of money, make a little, lose a little. And this is the most frustrating place to be because you're treading water and you're really teeter-tottering. You're either going to figure out how to go to level 4 or you're just going to quit and never trade again. You might dabble in it, but you will still lose money over time. And really one of the successes that you need to focus on skills is to get from level 3 to level 4 is focus on better risk to reward ratios. Then once you start making a consistent income, then you can get a little bit more sophisticated if you want to. All right. And when you get to level 4, your P&L is going to look something like this from the lower left to the upper right. And you'll also have a few little jaggy drawdowns that you'll have to weather to survive and go on and keep on trading year after year. Level 5, you get to where you're making a killing. And a killing's different for everybody. It could be $200 a day, $2,000 a day, $20,000 a day. It could be $200,000 a day. It could be $2 million a day. I don't know you personally. And then once you get to level 5 and then level 6, congratulations. Welcome to the club. You've made it. Now once you've got it up, try to keep it up. All right. What level are you currently right now in the evolution or life cycle of your career? Are you level 1? Are you level 2? Are you level 3, level 4, or level 5? And I'll try to tailor this presentation to the number that I see here. So in the chat box, give me what number that you are currently at in your level of competency. Level 1, 2, 3, or 4, just in the chat box, and that'll let me know kind of where you're at. All right, cool. All right, so you've probably done this in the past. And when I do this exercise, a lot of people are like, oh my God, how did you know? Well, it's because I've done this 1,000 times myself, and it can be potentially frustrating if you don't get a handle on it, where you have one big massive loss and then just as soon, this is just a big old negative number, whatever that number is to you. And then just as soon as you're up just a little bit of money, just a little bit, you cash it out and take it. Has anybody ever done that? I know I'm not the only one, right? Like you have this one big massive loss, the market just smokes you, and then you have the residue of that bad memory of that butt whooping that the market gave you because you did something wrong or you think the market went against you. And now every single time that you're up, you're just going to take a little bit of cash every time because you don't want that little winner to turn into one of those massive losses again. This is that's style A. Style B, a lot of people will focus on this. They'll make a little bit of money and then they'll die the death of 1,000 lashes, which is a rough way to go, but it's the way a lot of people die when they start out trading. Now, style C is how I'm going to try to talk you into start trading because I think you will make more money on it. Now, it's still tough. It's still hard. It's not easy. There's nothing easy in trading. I'm going to recommend you do this, where you have loser, 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 loser. Oh my God, I suck. And then you go big O gain. All right. Then you do that same series of exercises again. Small loser, small loser, small loser, 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 big O gain. It's still tough, but it's a smarter way to trade than either A or B. So that's what we're going to focus on. Like I said, risk to reward ratios are the key to success in trading and investing. If you get this one thing, it will make your life and your trading career much, much easier. All right. So you want to make sure that you focus in on those areas. First, we're going to do a little bit of math. I told you I was going to show you how to make $6,200 in 10 days. But first, we're going to do the first half of this trade. And once you get this, all you got to do is just hold it a little bit longer. That's all you got to do. It's pretty simple. Now, heads up, I did not do well in math in high school or college. I got D's, not B's, D's. So you can handle this math. It's not complicated. On the average P&L that most people on the previous class that I taught how to trade bonds, their average runner or their average crock pot trade was about 1405, which is pretty good. But you want to know if you can do this. So first, we gotta change a little bit of the way that you view risk to reward ratios, and so that you're not always just looking for just cherry pick trades that work 98% of the time, right? So if I was going to share with you a strategy and I said it worked 41% of the time, would you do it? If I said, look, I got this trading strategy, this little system, it's only right 41% of the time, would you do it? Yes or no? Now, every time I do this type of webinar and we talk about risk reward ratios, I always have somebody that goes, hell no, I would not do something that works 41% of the time. And it just means that they don't understand risk reward ratios, right? So let's go through a little bit of an example here of how that actually works. So we're going to pretend that we have a series of 10 trades, and we're going to be wrong on the first 6 of them and right on the last 4 of them. Now, trading never seems to work out in that way, so we're going to pretend here a little bit. So what we're going to do is we're going to have 6 losses, and we're going to risk $156. Okay, $156. So we go 6 times 156 would be a grand total loss of $936. Now you're about to say, like, man, that sucks. I thought you were going to teach us something good. That's okay. You just have to be willing to weather that little storm at first, right? And if you can answer that question honestly and go, yes, I can, heads up, most people can. After about 3 trades, they give up and go, oh, this stuff doesn't work. I knew it wouldn't work. It's just like everything else, right? But you got to really play the long game, not the short game, right? So now we've already, out of 6 trades, 6 minus 10 means we have 4 more trades left. Then what we're going to do is we're going to have 4 winners of $1,000. So what we're doing is our risk to reward ratio is we're going to risk 156 to potentially make 1,000. Right there, you don't have to be right very often in order to make that work, right? Now, most professional traders, myself included, we want to have risk to reward ratios of 2, 3, 4, 5, or 10 or above. Minimum I usually go for is 2. I really play in the 3 to 5 area, and a lot of times I'll go for more than that. So 4 winning trades at $1,000 a pop is going to be 4,000. So we're going to go 4,000 minus the $936 that we lost earlier for a grand total of $3,064. Now, if I said I could guarantee, let's say I could guarantee this would work 41% of the time forever until we all died, which I can't. I can't guarantee you anything. I can't guarantee when you go to sleep tonight, you'll wake up tomorrow. And I damn sure can't guarantee you that any trading strategy is going to continue to work forever, right? I just can't do that. It's unrealistic. But if I could guarantee that this would work at a 41% risk to reward ratio, risking 156 to make 1,000, would you continue to do it, right? And your obviously answer would be like, well, sure, I would. I would do it every single day if it happened, right? But let's say it's worse. Let's say that it's only going to work 3 times out of 10. So we're going to be right 30% of the time. We're going to be wrong 7 out of those 3 times, all right? So 7 losses times 156 will be 1,092. 3 winners at $1,000 is 3,000. We would go minus 1,092. We're still profitable 1,908, and we're only right 30% of the time, right? So you see how the magic of risk to reward ratios is better than trying to beat the market by trying to be more right than you are wrong. Heads up, it's damn near impossible to be more right than you are wrong in the trading business. So you might as well embrace that fact and figure out how to use that math to your advantage, like jujitsu, right? Like if you think you're going to be right 80% of the time, heads up, you're just not going to. I mean, if you are, please God, call me. I'll give you my money, right? All right. Average P&L of this trade is about 1405. So let's now the cool thing about this is you now have a new opportunity. If you've never traded this market, or if you've never traded markets that have really good risk to reward ratios, you now have a new opportunity, because right now is one of the best times to learn how to both learn how to trade bonds and actually place trades in the bond markets. These types of trades and moves have the potential to make a big difference in your trading life and your career. Now, here's the no bullshit about this thing. It will not be easy, but it will be worth it, which is like how most things are, right? Like anything that you learn, a new skill, will not be easy to obtain, but once you learn it, it's yours for life. All right. What is the best market for you to trade? Now, regardless, if you allow me to talk you into and convince you that the bond market may be a good market for you to trade, I want to at least give you something to go home with to figure out what's the best market for you to trade. So let's go through this exercise. This is really helpful regardless if you trade bonds or not. So most people start out with either stocks, options, futures, Forex, cryptos, and they end up trading whatever has the biggest volume, right? And we all do this when we start out. And then we end up trading the thing that's got the most volume, or whatever our broker says we should try to trade, right? Because everybody else is trading that thing. We tend to gravitate towards what everybody else is trading just because we want to be the popular cool kids too. And we're going to trade that, right? That's interesting theory that we kind of make a business decision on. Then what happens? We end up getting chopped up. We start asking great quality questions like, why can't I do this? I'm smart. I'm successful. I'm sexy, but this is just too darn hard, too darn hard. Like, and then you go, I knew it. The market is rigged. Well, it's not rigged. It just doesn't care about you one way or the other. It doesn't care about me either. It's kind of agnostic. It doesn't care if we're alive or dead. It's just going to do its own thing. It's going to move around. It's going to vacillate. It's going to go up and down. It's going to enable us to get in here at X and use a stop of Y, and the market's going to go up here, come back down to Y, stop us out to the tick, and then go substantially higher. It's just a normal thing that it does. And it makes us think that the market is out to get us, or that the market makers or the specialists and stuff that are running our stops, they're not. They don't care about them. They don't even look at them. And then even if they knew where they are, they couldn't do anything about it. They don't have the ability to move $4 trillion worth of market cap to come down and get you your 100 shares or your one lot. They're just not. They just don't really care about it. They're trading in between the bid and ask to try to make a tiny little sliver of a penny. Okay. All right. Now, the bad news is you have been betrayed by the entire financial industry. And it's not your fault, though. You've been lied to. And you're sitting there going, I knew it. Someone lied to me. Who is it? I want to go after them. Well, they're other traders, the media, investors, and it gets passed down from like trader to trader. Did you test? Did you do your responsible thing and test what is the best market for you to trade? And if you're like me, no, you did not, right? You just didn't. You're just like, hey, I'm just going to start throwing meat on a wall and see what sticks. All right. And it's kind of crazy that we do this with a lot of our net worth. So you need to test things out. All right. So I wouldn't trust anybody on a webinar, myself included. I would verify it first, right? And verify it with either demo money or throw a little bit of money at it and see if it works for you. And then whatever works for you, keep. Whatever does not work for you, then throw away. Now, true or false? I'm going to check out some belief systems here, people. True or false? If you can trade any market. Now, I've been a professional trader for 25 plus years. I've traded almost every single market out there except for the butter market. I've never traded butter. It's still traded in the pit, and I think there's 6 guys in that pit, but I've never traded that one before. So do you believe this, true or false? If you can trade any market. Let's see some of these answers here before I go on and grab a quick drink of water. Okay. All right. I would say it's a little bit of both. Like if you asked me to trade natural gas, I would lose all my money and your money if you gave it to me to invest. I can't trade my way out of a wet paper bag when it comes to natty gas. That market's just got my number, so I try to avoid it at all cost. Every now and then, I'll go over and go, let's see if I can figure it out, and it gets me every single time, so I avoid it. So I would say it is true up to a point, but it's going to be a lot easier if you trade something that matches your trading style and your personality. If you don't match your trading style to the right market, it is going to be very painful and very frustrating. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. So let's think about this statement. Excuse me. Is there a way that we can increase your success and make you a better trader faster? I actually think there is. And we're going to walk through that right now. What if I could share with you a way that you could increase your rate of progress and improvement? Now, I'm not talking about a shortcut to long-term success. I'm talking about avoiding some pitfalls so that you figure out the right market to trade, and still you're going to have to go through your journey in order to do that. So how to pick the best market for you to trade. Here's what I think you should go through. And I've walked several thousand people through this process, and it gets them away from the stuff that's killing them, and it makes them gravitate towards the stuff that's going to help them make more money. So first, you have to decide, are you a sprinter or are you a marathon trader? Here's my definition of a sprinter versus a marathon trader. Yeah, trading journaling is very important too, but you first have to figure this out first. So sprinter versus marathon. You're a sprinter trader if you enjoy markets that work like this. Run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse. Breakout, got you, sucker. Run, stop, reverse, run, stop, reverse. Right, breakout, got you, sucker. So that's the S market. So if you enjoy trading those type of markets, do not ever trade bonds. They don't do that type of stuff a lot. All right. Now, bonds get choppy too from time to time, but overall they're more trending than they are choppy. Okay. So if you enjoy trading choppy markets, you're going to want to focus on markets that are choppy in nature, the same way that you are, right? With your style. Now, if you're a marathon trader, you will probably enjoy trading these markets better. Up, retracement, up, retracement, up, retracement, up, consolidation, and then a bigger retracement. So this is the M methodology. So which one are you? Do you individually gravitate toward the S side or the M side? I want to be a sprinter, but I suck at that. That's okay. That's Aaron. That's perfect. And just quit doing that. Like if you suck at that, go towards the marathon side. Quit trying to bust your head through a steel wall. Like go, oh, I just suck at this. Let me try the other style first, right? And for a change of pace, right? You'll eventually find it. All right. So bond markets tend to gravitate towards people, and people that are more of marathon traders tend to gravitate towards the bond market. Okay. So the next thing you want to focus on is the range of that particular market. So let's say that everybody knows Amazon or Google. Let's go with Apple. Okay. Let's say AAPL has a range of 20 points every day for the next 2 weeks. We're just going to pretend that Apple's range is going to be $20 for the next 2 weeks, guaranteed. If I said, okay, it's your job as a aspiring trader that's trying to go to the professional side over to the dark side with me and all my buddies. If I said, I need you to grab 2 points out of that 20-point range, do you think you could do that? Yeah, you probably could. You could say, yeah, I could grab 2 points out of 20. I have that skill set. I think I can figure that out. Now, if I said, okay, well, Apple's now range is going to be $5 a day, and I need you to grab 2 points out of that $5 range. You may or may not have the skills in order to do that. For me, that would be hard. If Apple only had a $5 range and I had to jump in and get 2 points and jump out without being come out unscathed, that would be very hard for me to do. So the next thing, you want to look at the average true range of whatever market that you are trading and see if it's wide enough for you to get in there, get your money, and then get back out. Now, if you're swing trading, you're going to be in this for several days, and that's going to magnify that process. Now, the third thing is the kind of hard thing that I can't really help you out with, other than if you just want to call the office and I talk to you, is a personality match. So if you like choppy markets, here's some choppy sprinter type markets. Dow, S&P, Russell, NASDAQ, crude oil is a little choppy. Natty gas is a little choppy. If you like stuff that trend well, gold from time to time, bonds, notes, ags, stuff like that. Okay. And then each individual stock is its own little creature. Like sometimes Apple's going to be trending. Sometimes it's choppy. Amazon, sometimes it's going to be choppy. Sometimes it's going to be trending. And it's your job to figure out when that's doing that. So like I said, you have a new opportunity because right now is a great time to learn how to trade bonds. And these type of trades and moves have the potential to make a big difference in your trading career. So it will not be easy, but it will be worth it. Let's go through why I think you may want to look at the bond market in order to trade those bad boys. All right. So number one, they have a very nice ATR. Number two, they trend well. So ATR just means they have a real nice thick range. Okay. They're fat. They trend really well. Okay. And I think they're easier, a little bit easier to trade. Now, heads up, there's nothing easy to do in the world of finance. It's all hard. There's just different degrees of hardness and different degrees of easiness. So the personality of the bond market, it makes them a little bit easier and a little bit better. So I just think bonds are better in the fact that it's easier to hold on to winners longer, which makes a huge difference when you're only right 40% of the time. So it does not matter which way interest rates are going. You can trade these creatures both up and down directions. And I'm going to show you how I went through in 2018. So when bonds were going this direction, I was short them. I avoided most of this, not all of it, but most of it. And then I re-shorted them here. And then when they got back up here, I went re-long them there. And it's not hard to do. And I can definitely show you how to do that. So let's go through some bond basics. So first, we're going to have to go through margins, intraday and overnight. This is one of the common questions I get. Like, what's the margins on bonds? Well, intraday margins, if you're a day trader, which I will day trade, swing trade, and invest. I do all the time frames, so I'm not going to say one's better than the other. I tend to make more money on the swing trade side than I do the day trade side, just because it allows me to multiply the volatility over multiple days as opposed to just one day. But if you're going to just day trade them, you're going to need on average about $500 in your account to trade one 30-year bond or about 250 to trade one 10-year note. Okay. If you want to hold those creatures overnight, every one of those bond markets have a slightly different margin. So in other words, if you're going to hold this thing for more than, say, 24 hours, then you're going to need, 3,300 on the 30, 1,500, 1,490 on the 10-year, 743 on the 5-year, and then the 2-year note, 304. And then the Bund is another market that I trade. You need about 1,500 to hold that overnight too. All right. All right. Now, you also need to know when they open and when they close. The time that they trade is they open up at 6 p.m. and they close at 5 p.m. So they're open 23 hours a day. Now, I'm going to show you a little it's not really a loophole. I hate when people say it's a tax loophole. It's not a loophole. It's the tax code. Okay. So you need to learn how to effectively use the rule book, how to effectively use the rule book in order to trade bonds so that you can stay in them for 23 hours would be, I would place a trade at 6:05 p.m. Okay. And hold that sucker until the next day at 4:55 p.m. That way you're going to stay in it as long as possible, even if you have a small account and you want to day trade it. That would be my recommendation. Because if you don't, then you're going to fall into the trap of getting in at 9:30, out at 4:55. That's going to be a day session. 6 p.m. to 4:55. That's the best way to do it. This is going to be considered a day trade too, but you're getting 23 hours on this one, where on this one you're only getting about 8 hours. And it's really important. The longer you're in the trade, the longer you have an opportunity for it to work in your direction. All right, let's see here. Now, let's go through some of the bonds that I trade and the ones that I like. How did you make 6,000 in a week with 3,000 and it weekly? So it was 10 days. It was 10 days. It wasn't just a week. I was in both of those trading. It was 10 days. It was not 1 week. So it was 5. It was actually 2 weeks that it took me to do that. Now I routinely will do risk 156 to make 1,000 on this trade all the time. That's why I'm teaching you right now. And really all I did is I just held the trade multiple days. So there's the 30-year bond. This is the one that everybody talks about. This is the 30-year bond. I trade this one a lot. There's the 10-year note. Okay. There's the 5-year note. There's the 2-year note. And then there's the Bund. And I'm going to show you some live charts here in a minute why you may want to start looking at this market. Now, here are the ones that I like as opposed to the ones that I don't like. So I trade this one the most. And then I trade this one the second most. I trade this one the third most. I don't really trade these too much. They're just not worth my time and energy. They're just a smaller contract. So they're only worth $15 a tick. And for me, I want to go for more money. So I'm a little bit on the larger size of the contracts just because I get more bang for my buck. Now, who in here hated fractions when you were going through high school? I hated them. I didn't understand them. I still don't really understand them. But that's how these things are still quoted. It's kind of archaic, but you do have to know it. So what we're going to do here is these things trade in 1/32 equals a tick. And a tick just means a increment. So 1/32 equals one minimum movement or transaction that we're going to do on this thing. So if we go, let's pretend that we're long right here, LONG at 135, okay? 135, we're going to say we went long at 135 and we went all the way up and we held it till it went 135, 130 seconds. That means we would make one tick. That's one increment. And that one increment is worth $31.25. Okay. So I've got that marked right here. If we went from 135, we went long and we held it till it went 135, 230 seconds. That would be 2 increments. And then we go, it would be 31.25 times 2, and you'd make $62.50. Now, the good thing for you and I is that these things usually move more than a point a day. Okay. So if we go from 135 all the way up here to 136, that is 30 seconds, which 32 divided by 32 is equals 1. That's easy math. That's 1 full point. And if we are in that trade, we will make exactly $1,000. Now, initially on this risk, I'm going to recommend that you risk 5 ticks to make 32. Once you do that 2 or 3 times or half a dozen times, then I'm going to recommend that you risk 5 ticks or 10 ticks, whichever you're more comfortable with. And then I want you to have an open target so that you can open up your profitability. So you want to have a limited amount of risk, but you want to have unlimited potential on the trade. All right, so let's go through this actual trade, how it works. So the one that I did this one on both of these markets is called a 30-year reversal trade. Now, oddly enough, the bonds are fairly structured. They're fairly methodical. They go like this. Now, it doesn't work all the time. Like I said, it works about 40% of the time. They're going to go up, then they're going to retrace, and then they're going to continue. Then they're going to go up, then they're going to retrace, and then they're going to continue. And what I do is once I've got the range is going up, then I'm gonna go, okay, I'm gonna mark a high point, and then I'm gonna count back 1, 2, 3, 4, 5, 6, 7, 8. I'm gonna bid long right here. And then I'm gonna risk 5 ticks in order to potentially make 32 ticks. Okay, so I'm gonna risk $156 to potentially make $1,000 initially. So let's see what that looks like. All right, so you're first going to look for the high and the low. You're going to try to stay on the side of the daily trend if you can. It's just going to make it easier for you. You can use this as a day trade or in an overnight swing trade. The 30-year has different increments you can trade. You can go an 8 tick, a 12 tick, a 16 tick, and a 32 tick. I tend to go with the 8 first, and I only have an hour here, so I'm only going to teach you that one today. All right, pick 2, don't pick 3 or more. You don't need more than two of these trades to be successful. All right. Be careful of the ATR. And what I mean by that is if the bonds, if we know they move 1 point a day, and then that would be 32 30 seconds. Then if the bonds are up 28 30 seconds, heads up, it don't make a whole lot of sense to do this trade, right? So you have to filter that out. All right. So we are going to pretend that we've got a bond market that was just going crazy to the upside, right? Had a nice little trade from 141 up to 149, and then all of a sudden this trend line right here got broken, and we're like, uh-oh, something changed. Well, what was it? I don't know, nor do I care, but now they're going lower. Now I'm going to short these things because we are no longer in a valid uptrend because the trend line got violated. So knowing that, I also institute for myself, has anybody ever started out with a very small loss for the day and then just dug a crater and you're like, why did I do that? Why was I so stupid? So I have a 3-strike rule. I can never lose more than 3 consecutive trades in a row. And usually I try to keep it to 2, but in this instance, I'm going for 3. So this is the AM session. It opened up and I had strike 1. I immediately lost $156. And I was like, oh, that's terrible. And then it said strike 2. I lost another $156. Okay. So I'm down now about $300 on the day. I wait until they close and open back up at 6. They initially go higher, and I'm like, well, I've already got them pegged as going. I only want to trade the short side. Okay. So then they go lower, and I'm like, there we go. And then I see this low in place, and then I start counting 1, 2, 3, 4, 5, 6, 7, 8. I'm going to short them right here. So I'm going to risk 5 ticks to make 32 ticks. Here's the math behind that again. So let's walk through that. So I initially have the market as going lower. Okay. I already struck out, or I had 2 strikes out of a potential third. And then it opened up at 6 p.m. It went higher and then it went lower. And this low right here is signified at 146, 430 seconds. Now, I don't know if that's going to be a low. I just see it bouncing off of that low. And then I go, okay, that could be a potential low. So I go 146, 430 seconds. I'm going to go 4 plus 8. What is 4 plus 8? Even in Kentucky to this day, 4 plus 8 is still 12, and also in most countries throughout the world. So what I'm going to do is I'm going to say, okay, this is the bottom potentially. And I go 4, 5, 6, 7, 8, 9, 10, 11, 12. All right. So I'm going to short it at 146, 12, 30 seconds. Now I'm going to risk 5 ticks, 12 plus 5, pretty simple. 2 plus 5 is 7. So my stop loss is going to be 1730 seconds. That's my stop of 5 ticks or 5 increments. Now, my target, if I'm short at 146, 12, 30 seconds, then my target initially is going to be 145, 12, 30 seconds, which is right down here. Okay. Now, I don't initially trail the stop until I've made at least double my money. Okay. And if I'm in bed in this trade, with this is in the middle of the night, looking, you see 2 a.m., 3 a.m., 4 a.m., 5 a.m., I am not getting my big ass out of bed to come in here and trail a stop loss. It's just I'm going to do the risk of 5 ticks. I'm going to go to bed and I'm going to wake up the next day. Okay. Now, the cool thing about that is I can't mess it up. I can't jump out because I'm scared, or I can't jump out because I get too greedy. All right. So then I wake up the next day and I go, oh, it's working. That's nice. And then I go, okay, I had a risk of 156 up here. Okay. And I'm just going to trail my stop down and lock in $375. Now, about 2 minutes later, my stop or my target got hit at $1,000 and I was able to book $1,000. Now, after you do this trade six or seven times, you're going to start to throw up in your mouth a little bit because you could have made more if you just held it for more days. Okay. So, as sexy as making $1,000 on $156 of risk looks, it's really not the ideal trade scenario. So now I let it open up and I let it breathe. And that's how I was able to make that 6,800 or that 7,200 there in 10 days, just holding it for multiple days. And in that case, it was 10 days. All right. All right. Now, I'm going to show you how I also do this with an indicator on my chart here. So first, let's take a look here at the bond market. This is the 30-year bond. You can see the 30-year bond here. It's in a valid uptrend, right? So I'm also going to walk you through. So that's the 30-year. And let me show you why I like trading these creatures so much. So I'm going to do you a weekly chart here of bonds. And you can see they have some really good weekly trends. Look at that. Look how much they'll trend up and down, right? And then this is the monthly chart. Look at these creatures. See, they have a really good trend. This is the 10-year note. And then this one right here, you don't have to have more than 2 brain cells. Which way you reckon the Euro Bund is going right now? On a monthly? Oh, let's do a weekly. Oh, okay. And let's do a daily. Oh, that's pretty easy to trade, right? So not too bad at all, right? So what I'm going to do here in this one, so first I'm going to try to call the direction on the 30-year. I'm going to walk you through this. Now, we can't trade these because they don't trade in a weekend. But on this situation right here, I would still have pegged as bonds are going higher. As soon as I can get them right back above this 146, 130 seconds, I'm going to be all over the long side again, okay? Now, when we went from up here, and then when we close down below the purple, I got to leave them alone. I have to leave them alone until they go back above 146, 130 second. But let's pretend I didn't have to do that. Then what I can do is I can come over here and I can go, let's just pretend that we've got these things pegged as going higher, okay? Then what we would do is we would look for this direction right here. This is what it did on Friday because I know because I traded it. And you watch this. Watch this. I'm going to go from the very high mark right here. Dink. Look at there. You see how cool that is? So from this high, that's exactly 8 ticks. There's my 5-tick stop loss. And then there is my 1,000 tick target. Okay. Now in that one, it's an example of one that you may or may not got to fill. And you may or may not got to fill on the exit here. But that's how you do it. Now, watch. That was one chance. And then there were a couple other chances in here. Here's 2 chances. And then there's 3 chances. So you had 1, 2, 3 chances of making a little bit of money before they rolled back over on you. Now, I would recommend doing this first trade, but why wouldn't we potentially do this second and then this third trade? Anybody want to take a guess? It has to do with that average true range. It was already up basically a full point from here, from when it started running, from 145 to 24:30 seconds. We know they're only going to run from about 145 to 146 a day. So it doesn't make a whole lot of sense if you do this one to try to hold it on for a multiple day run. Now, down here, it makes sense. All right. And the cool thing about this indicator, if you don't like my setup, you can format it and come in here and go, okay, inputs, like I'm using an 8, a 16, a 32, a 5 tick stop loss, and then the targets are 32, 60, and 90. So it's a user configurable indicator that you can use. So, and I like to do that a lot. So, and regardless, those are the ones that I like to trade. The 30, the 10, the 5s, the 2. I don't trade a lot of 5s and 2s. I trade the 30, the 10, and the Bund a lot. Those 3 markets. All right. Now, let's get over here to the rest of this. I showed you the indicators. Now, it works on a lot of different platforms. You don't need them. If you can count to your hands on 8 fingers, you're good to go. What happens after the 23rd house? Do you get finance charges for overnight? Yeah, if you hold overnight, you'll get you just have to have the overnight, your bank account or your trading account just has to be big enough to hold it, is all. You don't get finance charges. You just have to, if you don't have, say it costs $3,000 to hold that overnight. If you don't have it, they'll kick you out of it. Yeah. They're not going to charge you interest though. They'll just do a margin call on you. All right, the new bond trading bootcamp, module 1, how to risk how to use risk reward ratios in bonds, how to trade trends and trend reversals, how to best trail your stops for maximum profits, how to hedge and stay in winners longer, and ongoing mentoring. So I usually teach bonds usually once, sometimes twice a year. And a lot of times we have multiple people take it multiple times with us because we usually make more money than we lose. So in module 1, you have low risk, high reward bond trades, where I'm going to share with you 7 of my favorite bond trades, both swing trades and day trades. One is for wealth building, and then one is for cash flow. You can discover the power of the bond markets and how to trade bonds and see if they fit your physical personality of how you like to trade. And some of you, they just won't, and some of you, they will. It's a great way, in my opinion, to make an extra $8,000 to $12,000 or more a month when trading bonds when they're moving. Now, sometimes bonds go stale too, and they're choppy, and you need to avoid that like the plague. But when they're trending well, it's a very easy way to add an extra $8,000 to $12,000 to your monthly income. Bond trading bootcamp previous results. Now, I'm going to show you this, but past performance is not indicative of futures returns. I can't guarantee you anything. The last class we were ever, and I only usually do about 4 sessions with people, 4 live sessions. We were able to make 93.75. The one before that, not as well, 62.50, and then the one before that, 11.872. And that was in 4 sessions. So that is that market module there. And then in module 2, how to trade trends and trend reversals. Once you learn how to trade trends and trend reversals, it's going to make your life a ton easier, and you'll always know what to do next and what stage you're in. And then in module 3, how to use the best trailing stop loss for maximum profits. A lot of people tend to be serial killers of profits. They'll either strangle the trade to death or they'll give it too much room to breathe. Yeah, you can use the TD Ameritrade platform. Now, they won't let you trade the Bund, but they will let you trade the 30-year, the 10-year, the 5-year, and the 2-year. All right. And then module 4, we're going to discuss how to hedge. This is a great way for when you're in a longer term trade, how to hedge it with a different contract month or a different contract altogether. And it's a great way for you to potentially stay in the trade a lot longer and make a lot more money. Module 5 is where we do online mentoring, where once a week for the next 4 weeks, we'll get together. I'll go over the markets with you and tell you what I think about them. And we'll find the turning points. If it's sloppy and choppy, I'll be like, hey, just leave them alone. Or I'll be like, hey, definitely uptrend. Well, let's focus on the upside. And this is where, after you go through the on-demand course, you can ask as many questions, and I'll try to answer as many as I can for you. That's in module 5. So you get 7 bond trade setups, live mentoring, updates, indicators, resource center, ongoing support, and we always deliver over here. Now, the indicators, they work on these platforms currently: Ameritrade, Thinkorswim, TradeStation, eSignal, NinjaTrader, Sierra Charts, and Infinity IAT platforms. Now, you don't need my indicators in order to do this. So if you have a weird platform, don't worry about it. I just develop up indicators for myself selfishly because I don't like to calculate it all in my head. And if I can throw an indicator on a chart, it just makes my my decision-making process a lot quicker and a lot easier. But you don't need them. It's just a nice bonus to have. All right, multi-chart platform license, so that if you use more than one charting package at the same time, like if you use Thinkorswim or TradeStation or eSignal, it's just still just one low price. You don't have to buy 3 different licenses. Multi-computer license, so if you have more than 3 PCs, a work PC, a home seat PC, you're covered up to 3 PCs. We also have an easy installation, very short little video showing you how to install these indicators on your own machine. If you can't do that or you don't want to, we can do it for you. You just call the office, and we'll control your PC from here, and we'll get you up and running as quick as we can. Now, let's talk about who this is not for. This is not for holy grail seekers that are addicted to hopium and guru surfers that can't make a decision or that just love making trading more complicated for no good reason. Who this is actually built for is for people that are serious about making real money in the markets. If you're looking for a proven system and a good market to trade, bonds may fit for you. If you can follow a simple set of rules and directions, and if you know that your success is tied to taking action, then you're going to do just fine. Now, what I have found is in this course, we have about a 70 to 75% success ratio, which is pretty good overall for trading products. Now, you must have good risk reward trades. A good setup that gets executed will beat the pants off of a perfect setup that goes unexecuted. Good is good enough. You do not Do not try to filter out all the losses and the stop outs. It's pointless. You're never going to figure out how to do it. Nobody can do it. That's a fool's game, and for suckers only, you are going to have losses in trading. There's just no way around it. As long as your risk reward ratios are good, you're going to come out ahead. All right, here's a fraction of what you'll learn. My favorite bond trading setups to time the markets better, trading rules and indicator settings, checklist with cheat sheets with entries and exits, stop losses and targets, how to scan the markets for good ones, how to potentially minimize your risk and potentially maximize your gains. Everything is already recorded online, ready to go. It's an on-demand class, and you can take it right now. And then I'll be with you next Tuesday to do some live trading and to do some analysis of the markets. You now have a new opportunity because right now is one of the best times to learn how to trade bonds. This could be your best year ever. These types of trades and moves have the potential to make a big difference in your trading career. It will not be easy, but I promise you it will be worth it. All right, so we currently sell the new bond trading bootcamp mentoring program for $1,997. I'm going to throw in the bond trading breakout indicator, the retracement lines. You also get 4 live sessions of me actually trading with you. And then I'm going to give you 1 live retake. So what we have found over the years is a lot of people like to take this class more than once a year. And I usually teach it 1 or 2 times a year. And then the retake fee is $497 or $495 if you want to take it. And I'm just going to throw one of those in there for you. And we still charge to this day retake fees. But what I'm going to do is I know I'm going to teach it once live this year, maybe twice. You guys are going to get the on-demand version, plus be able to attend the live version too. And you don't have to pay the $495. Okay. And the reason people do the retakes is because we usually make more money with them than when they're just on their own, just because they need a little hand holding. I'm also going to do 4 analysis sessions, 1 per week for the swing trades. So the live sessions are live day trading sessions, and then these live sessions here are for swing traders. And you can do all 8 of them if you want. So it's a grand total of $5,062. Today for this webinar, the discounted price is $997, but it's only for the first 12 people. Now, I usually post the telephone number, and it's up here right now. Please don't call it. I'm the only one in the office. Jared and Karen are off today. I really don't usually have my work on Saturday. So if you want to go to this link, hubertsenters.com/bonds, you can order there. Now, the one thing that a lot of people have problems with on webinars is, oh, that's great. All you trading gurus are making all kinds of money selling courses and trading and other things. It's not just me doing this. So what I've got here, which I don't think anybody else has, is I have a testimonial email here. I've got 370 testimonials, and you can see them all right here in this Gmail they send to me. And $656, and I can go all the way back here, and you can read some of them. I made $1,200, I made $2,000, I made $6,000, I made $2,000. I didn't think it would be cool to share everybody's email addresses, so what I've done is I've just compiled a bunch of these while I'm answering questions. I'm going to put these up here, and you guys can read through them, and I'll just flip through them while I'm actually answering questions for you. And so that's the link you need to go to, hubertsenters.com/bonds, hubertsenters.com/bonds for the first 12 people. And then here are a lot of testimonials. Here's the common questions that I get with this. Oh, excuse me. Is this for day trading or swing trading? Both. Can I do this if I have a small account? Yeah, you can. You need at least about $3,000 if you're going to overnight trade them. In intraday, you only need about $500. Will this work on my platform? Do I need any special indicators? You don't need any special indicators. You will need to have a futures broker in order to do it. Will it be recorded? It's all already recorded online. Can you do this? I don't know, and I don't think anybody can really tell you if you can do it or not. I will do my level best to teach you how I trade these suckers. And then here are just a bunch of testimonials. I have over 200. I know it says 100 plus. I have over 200 testimonials of people just like you that are not me, because I know a lot of people look at trading gurus like we have something special. We don't. But here you can see morning work like a champ, $531. And then I've been averaging 2,200 to 2,500 a week on a relatively small account. That's from John. This was from Sherry. And then you just go through and you just read every single one of these. $2,000 win with only $312 risk. And these are just normal folks just like you, right? Because I know a lot of you guys look at us like we're special, which we're not. $512 extremely happily if I hit my first target next time. $1,200 bond trading boot camp. And so they're all paying for the class on one trade. Here's another one from Kay. I've never traded bonds before. I've made over 30K with 5 contracts. So she's trading a little bit on the higher side of things, but she made $30,000 on 5 contracts. That's not too bad. So she obviously she had a good ROI on her investment. Here's one from Doyle, made 2437, 406, 2031. So not too bad. He had a pretty good week. Let's see here. So what happens? All right, got that one. Do you stay awake until you lock in 10 ticks profit? And then, no, I just go to bed. I just use a stop loss. Can I use TDMA or trade platform? Yes, you can. What is the minimum capital to start at trading bonds? About $500 for day trades. Are there certain hours when bonds trend better than others? Oh, there definitely is. Yeah. You said we need a futures account. What about data? What brokers do you recommend? I cover all that in the course. You could use TradeStation, Thinkorswim, Infinity. There's a ton of brokers out there that will allow you, if you can, it's just a futures contract is all it is. It's just the bonds, 30-year bond, 10-year note, stuff like that. So yeah, I hear some of you guys calling in here. I can't answer the phone because I'm on a webinar. If you call and you just leave a message, Jaren or Karen, my right and left hand man and woman, will get to you first thing on Monday. All right, so here you go. Just made my first $1,000. Not bad for a 4 nights sleep. That's from Greg. I woke up this morning with $1,000 profit. This is where I'm teaching them how to risk $156 to make $1,000. So there's that link. Here is Bill. He took a screenshot of his TradeStation where he went long here and exited there, and he made I think it was $2,000 in his email. $2,000 profit on his first bond trade. He was using a 5-tick stop loss. He had two contracts instead of one. That's why he made $2,000. Here's one from Greg, Rebecca, and Joe. Greg saying he made $1,000. Rebecca saying she made $1,000 profit. Joe saying I picked up 8-tick reversal pullback. Method made $3,000 on 6 trades. Number of winners, 3 losers. I now go to sleep knowing very well the worst case I could lose is $156. That's the cool thing about this trade. The risk reward ratio is thanks Jerome, I appreciate it. The cool thing about the risk reward ratio is you're only going to lose $156. If you can do that, a string of 10 trades, and if the ratio sticks at 40%, you're going to be just fine. If it doesn't stick, well, obviously you're going to lose more. All right, here's another screenshot from a satisfied member, 1,062. Here's one from John. John said, I thought this was funny because I thought he was talking about something else. My first non-paper trade, I lost my mind in 63% of my account. I thought he was talking about my course. I was like, that's a terrible testimonial. And then he said, it took me 2 years to get back to break even. And then I found Hubert. I made $8,000 during the bond trading boot camp. From then till now, I've doubled my account trading nothing but Hubert's bond strategies. These aren't actually my strategies. I learned these from a professional bond trader in the pit, and I just modified them to work for myself. And there's nothing special about what I'm going to teach you at all. This is it's not that hard to figure out, believe it or not. It's just what I'm going to show you is, hey, the bond market's probably a good fit for you. And if it is, you're going to love them. And if it's not, you're like, shit, that's the wrong market for me to trade. And you have to move on to something else, right? All right, here is Edward, made a whopping $5,650 on 30-year bonds, approximately 7 times the profit. So this is where he says, as I had fairly equal values in both stock options, both calls and puts, and 3 options on the 30-year bonds. At the end of the day, I had made approximately $830 on the equity options, not bad, while making a whopping $5,650 on 30-year bonds, approximately 7 times the profit. Suffice to say, I endorse the bond trading bootcamp. So I got about 5 more minutes. So let's see here. Do you basically go to sleep and then 2 days a week when you wake up, you're up 3 times, you're stopped out or down marginally? So it depends on what's going on in the bond market. If they're trending well, I can either place it intraday or overnight. I usually tend to do it overnight because I like trading the overnight session just because I get a little bit of edge because it's a little thinner then. So then I can go to bed. Sometimes I may only make $500 or $600 on the trade if it kind of peters out on me. But then other times I'll get a crock pot trade where we just sit there and let it marinate in the volatility of the market, and we just increase that P&L over 2 or 3 or 4 or 5 days sessions. So yeah. Let's see here. like I said, I could go on and on. I've got over 200 of these testimonials from people that have successfully learned how to trade bonds. There is nothing secret or special that I'm going to teach you. It just tends to, people just kind of tend to gravitate towards this market, and it tends to just suit more people than it doesn't, which is why there's so many testimonials. There's nothing special about me or these methodologies, I promise you. After 1 week in the bond trading boot camp, I'm up 2,500. There you go. I cannot thank you enough. I believe only way of thanking you is spreading the word around. Oh, that's cool. And then Humphrey said he made $2,000. So that's not bad. I've made 1,850 net profit on my first 4 trades. That's not that bad at all. And then here's one, 6 weeks, lost money, got down to 2,000, got frustrated, but hung in there. Hubert hung in there with me through the whole process. And then now they're starting to actually make money. So like I said, I'm not going to be able to help every single one of you. Success ratio that we try to go for is about 70 to 75% of the people that take the class. If we get them successful, we're pretty satisfied with that. And for some people, will just never give it. So, I mean, we try to help them out as much as we can, but we can't save everybody. I've made over $2,000 on a $5,000 account during the bond trading boot camp. I only started on the 19th of June. So that was last year's class. I've been trading options for 8 years and losing most of the time. So now he's making more money trading bonds than he is losing on options. So that's cool. I normally don't write testimonials. However, beyond the call, convincingly using these simple techniques, one can consistently turn a profit, in addition, making it fun. Here's one I made $1,000 on one contract on the 30-year, paid for the course. CL is not a good one to start with trading futures. So that we go back to that same discussion that Dan evidently tried trading crude oil, got smoked on it, then came over to the bond market and started making money. Those are two totally different markets. Crude oil is sloppy and choppy, and bonds are more methodical in nature. So that's why he made money there. First live trading day, and I'm up $1,000, the fastest grant I've ever made. Class pays off for itself, $1,600 over $7,200 since starting. Thank you, Curtis. And they just keep going on and on. I can kill you with these things if you want me to. I've got 2 more minutes to take a couple more questions, and then you guys are free for the rest of the weekend, obviously. I attended your free webinar on Thursday night and took the trade you suggested. I used 2 contracts. I took profit, moved the stop too close, and 32 ticks would have made 2,000. So they just messed up on the trailing stop loss. If I had stayed in, I would have made $4,000. So they just broke one of the rules. That's not a big deal. I figured I could. So she made only $2,000 instead of $4,000. Terrible, right? I figured the least I could do is give you half and order the bond trading boot camp. So I thought that was nice of you. Doubled my account since class. 9,500 in profit. There you go. I have made, this is probably the best testimony I've received because it goes specifically to, I live in Kentucky, specifically to the risk reward ratio. Read this one really careful. Don't worry about all the positive stuff. I'm still making some mistakes, but I'm doing well. That's what you should get out of that. I have made 15 trades, only 4 winners and 11 losses. I have made 6,156 and lost 1,437. So I'm up $4,719. That's great right there. That's exactly what you should look forward to in bond markets. If you're trading when they're trending well, and you should be good to go. And that's really how trading works in my opinion. Like, you're going to have more losers than you're going to have winners, but if you're making more money than you're losing, that's how you play this game. It's not like having 11 winners and 4 losers. Like, that's a very hard game to play. It's the opposite of how it should be played. Like 4 winners, 11 losers, and netting $4,719 for the week. That's not bad at all. Several great trades in a row, making about $1,400 a contract on average. And it looks like it is out of time. I'm out of time. Good luck. Hope it helps. The link is in the chat box there. Let me grab you one right here and put it in the chat so you guys can look at that. And I'm going to wish you a great weekend, and hopefully you make money trading next week. Good luck. It is a one-time fee. You do not have to pay any yearly dues or subscriptions. Do you show us how to journal our trades? No, I do not. That's kind of on you. I mean, you can do it as in Excel. I do it in video format, but journaling your trades, just whip out a notebook and take down some notes. It's not hard. You don't have to be taught how to do that. Just write down what you did right and what you did wrong and what you think you should be getting better at. And if you can't handle self-criticism of yourself and just being brutally honest with yourself, like, damn, I suck at that. I jumped out like a little sissy today. I should have stayed longer. You just have to be brutally honest when you're doing trailing journals so that you can actually focus on getting better instead of like always lying to yourself and going, market got me. Like, no, I just broke my rules today. So, all right, good luck. Hope it helps. And I'll see you on the next one, guys.